Everybody, this is Rob Keens of goldsilverpros.com. It is Friday, June 11th, 2021. And for today's video, we have got an absolute shocking CPI print that we're going to talk to you about and how this is rocking Wall Street. And we're going to talk about how we had discussed this several months ago when we started looking at the commodities price increases and predicted that inflation was coming, both for our subscribers on the website as well as for you guys that follow us on the social media channel. So we're going to get right into that. First, I wanted to talk to you about our sponsor for this show. The sponsor is Portofino Resources. They trade on the Toronto Stock Exchange Venture under POR, on the Frankfurt Stock Exchange under POTA, and on the OTCs here in the US under PFFOF. Portofino, we've covered before, had an interview with their company management. This is a company that we like and have been covering for the last several months. They had recently a news release in May about getting some gold drilling results from the Gold Creek project. We talked in detail about that Gold Creek project. We broke it down in a lot of detail in our quarterly newsletter, our spring quarterly newsletter. Those of you who are website subscribers will be familiar with that. The main print here that I wanted to bring your attention to is almost 7 meters of 1.7 grams per ton gold, and 3.36 of those meters had 2.4 grams per ton gold. That is a really good drill result. They've got some highlights down here, the drilling result table down here, which you can see that they've had really good results in several different drill holes on this table. Those are all really positive drill results. The company continues to do more exploration at the Gold Creek project and provide good results to their shareholders. This is very positive news for them. And I believe going forward that this company could potentially be a good option for your portfolio. Of course, do your own due diligence. But you can see our review by signing up on our website as a paid subscriber under the quarterly newsletter in the spring. All right, now on to the subject of the video. I want to talk to you about consumer prices. So June 10th, the world was shocked. High CPI like we've never seen before. While people were lamenting, and the Fed was lamenting that we weren't able to get up to its targeted 2% inflation rate, we've had 2 straight months of high inflation. We'll get to that here in a moment. The headline at CNBC, consumer prices jumped 5% in May, fastest pace since the summer of 2008. That's right, ladies and gentlemen, since right before the Great Recession, the last big financial crisis that almost took down the banks. Remember when the mortgages market melted down? You had the original repo crisis in 2008, which led to a freezing of the financial system, problems with Lehman. Okay, once again, we've had the highest inflation print since the last time the economy almost completely melted down. This is not a misprint. The headline consumer prices rose 5% year over year in May, the fastest pace since August 2008, and higher than Wall Street expectations. Well, duh, everybody priced in the 2 to 3% that the Fed had been parroting is the target inflation rate for the longest time. The 3.8% rise in the core inflation rate, which excludes food and energy prices, was the sharpest increase in nearly 3 decades. So that's the great news, guys. If you don't wear clothes and you go naked and you don't use energy, and you don't eat, then it's only 3.8%. Great. Isn't that wonderful? The surging used car prices helped drive much of the inflation gains, and initial jobless claims totaled 376,000, a touch higher than the estimate. So again, employment not doing great, and we haven't risen in terms of the labor force participation rate to much higher than we had during the last financial crisis over the last 12, 13 years. So employment really has not gotten better, and the shutdowns last year really exacerbated that. And now we have higher prices as the world economy tries to restart, and that's called a base effect. You're starting from a lower base, and then the prices rise much higher due to the demand. The question is, will this last a very, very long time, or will we have a base effect for a while and then CPI will come back down? We don't know. However, that's the problem when you try to shut down the economy and restart it. You get stuff like this. This is the unintended consequences of those types of government policies. And here's a nice little print here on this chart. You can see, wow, popped up inflation. Nice. Biggest since the last financial crisis, and then biggest since the last financial crisis before that. So the common thing to look here for on this diagram is every time we have a high inflation, CPI inflation number like this, we're in one of these gray bars, which is otherwise known as a recession. What is that telling you, ladies and gentlemen, about where our economy is. So more to read on that story. We've got another one from Market Watch. Another report came out June 10th. U.S. consumer prices soar again and push CPI inflation rate to a 13-year high. That's right, a 13-year high. The numbers: the cost of living surged again in May and drove the price of inflation to a 13-year high of 5%, reflecting a broad increase in prices confronting American as the economy recovers. Now, anybody who's read my website and followed the channel knows I don't really put a lot of stock into the CPI. I spent 50 pages of my book called Drop Shadow: The Truth About the Economy, which I wrote in 2009, published in 2010. I spent 50 pages talking about why the CPI is not a real number, and a lot of research in that case. You can go to Shadow Stats and get the real number from John Williams. But in any case, when the tamped down, if you will, inflation rate jumps to 5%, the real inflation rate's got to be a lot higher, and that's going to do nothing but hurt both consumers and savers at the same time. The consumer price index jumped 0.6% last month to mark the fourth gain in a row. Again, same chart as we saw on the other website. Same thing. And it's got this really cool little graphic, which is talking about core CPI, 10-year average CPI, PCE. All the numbers are bad. I mean, they're all bad. They're all basically redlining or getting close to it. The core PCE and the core CPI are goofy numbers because they take out things that people need to basically survive. Otherwise, you're running around naked and afraid with a spear trying to hunt a buffalo. So I don't even know why they published the core CPI and PCE, because people couldn't live in modern times, excluding food, energy, and things like that. But hey, why not the government put that out there? Why not make it seem like it's not quite so bad? Well, if you look at the core, it's not quite so bad. You're running around naked with no food and no ability to transport yourself and improve your life. But hey, the government issues that number, so why don't we talk about it? Now, I said for the second month in a row we had high inflation, which I predicted earlier this year looking at the commodities indexes. Well, here is an article from Forbes last month where inflation had spiked 4.2% in April. So this is not an anomaly. This is 2 months in a row we've had a very high inflation rate spike again, going back to the chart. Ba-boom, ba-boom. There you go. It's gone vertical, just like the monetary supply and just like some of the commodities complex, which led to a nice little tweet here. Good morning from Germany, where Deutsche Bank's chief economist warns of the inflation time bomb. There could be inflation rates of 5% on a permanent basis. On a permanent basis, warns Deutsche Bank's chief economist for Germany. Boy, that doesn't sound good. Isn't Germany the economic engine of Europe? I can't imagine what a prolonged and sustained 5% monthly inflation rate would do to one of the most powerful economies powering Europe. Gee, I don't know. What do you think? And again, ladies and gentlemen, if you've been watching my channel, we predicted this. We started following after the shutdowns of the economy. Last year, we started following the push up in the commodity indexes. We looked at the Dow Jones and we looked at the Bloomberg. We're going to look at both of those today, starting with the Dow Jones. Look at this nice little recovery in the commodities price index dating all the way back to 2016. We recovered last year and then it kept going. So ladies and gentlemen, this has kept going. The commodities price inflation, in other words, all the stuff used as raw materials to the finished goods that you buy, which leads to the CPI print, has been going up steadily. So you can expect the next few months, at least, I would say probably next 6 months, of consumer prices to rise until these commodity indexes start to fall, because it's the precursor to what you pay for finished goods. Same thing with the Bloomberg. We had a nice little fall in 2020 at about the same time, bam. And then it recovers to pre-2017 to 2016 levels. We're now well above commodity prices of 5 years ago. It's not just a rebound, ladies and gentlemen, from the shutdowns. That was the original base effect. It is blowing way past that. And until these settle down, these commodity indexes settle down, I predict the CPI is not going to settle down, because there is a correlation. When everything in the economy gets more expensive, including food and energy, clothing, shelter, all of that, the inputs, the prices you pay for the final goods are going to increase too. It's not rocket science. So I think this is a new prediction I'm making for the rest of 2021. We're going to have some pretty shocking inflation prints. I'm not going to call a high number, but I think it's going to consistently be at least double what the Fed's target rate is. And if you go back to previous comments by Janet Yellen saying that she thinks inflation is good for the economy, it shows you how insane some of these people in the government are that think that if we have really high inflation, it's good for the economy, because it's going to hurt everybody. And some anecdotal evidence. I had one of my assistants who told me she went to get lunch today. She went to get sushi and prices were sky high. Then she went to the store to get toilet paper. Prices were sky high. She could not believe it. And, you know, I've been saying on other shows I've been interviewed on and in private conversations, prices are rising very fast. Nobody even believes the CPI numbers anymore. And I don't think we're going down for quite some time. And this could be leading to the eventual meltdown in the economy, because if we have really high inflation, it could cause a deflationary economic activity event. You have inflation in prices, which could lead to a deflationary economic production impact because people can't afford much. Why? Because wages will not keep up with prices in this type of situation. We've seen that in this situation before. That's another thing that I documented in my book. It was part of that book, Drop Shadow, The Truth About the Economy, which you'll get if you sign up on our website, basically as a paid subscriber, where I go through that book and I show you wages don't keep up in these types of situations and these economic and fiat money events. Wages don't keep up with the inflation. And so what happens is you buy less, people tighten up, and you have deflationary economic collapse. And that's where the Fed's going to come out and drop the rein in terms of the money. If you think they have dropped the money now, baby, you ain't seen nothing yet. It is going to come and explode. Now, what's going to happen to gold and silver prices? Well, gold and silver prices are going to go up. That's an easy one because the precious metals continue to reflect prices in the economy. I'm going to show you our website in terms of where you can sign up for our free newsletter. We like to do this every time. You can go to goldsilverpros.com. Now, if you want free notifications of all the content that we do, you go to goldsilverpros.com. and you click this little newsletter button up here and you put in your email address. That's all free. We do not spam you or sell this information, but we do notify you when we have free content coming out in case you're not getting those notifications via YouTube, or you're not logged into YouTube, but you want to know when we're doing content such as this. Also, if you subscribe to the website through the paid subscription, you can get access to Gold Silver Pros University, which is about 30 some courses that will teach you everything about the economy that the financial classes in traditional K through 12 and in college will not teach you. And you get access to the Golden Quarterly, which has our economic state of the economic union, so on and so forth. And just to let you guys know, we do a lot of research and we have put out some predictions. If you go to our research page on our website, you'll get the PM prices, you'll get the London fixes for gold and silver, you get the current prices for all the precious metals. But look down here at confirmed forecasts. We give you the links to where we made forecasts and they came true later. So this is our 32 confirmed economic forecasts since 2010. We have a track record of being right. We also have 8 that we think are going to come true, that either in the process are coming true or will come true. You can see those here for free on the website. If you want to check our ability to predict what's going to go on, such as we did earlier this year with the inflating commodities prices, and we said we're going to get inflation, and now 2 months in a row, we've had some shocking prints. Going to raise prices, going to lead to tightening of the belt, going to hurt the average American unless you own the precious metals to offset the effects. Unless you own the precious metals to offset the effects. Okay, I can't say it enough. Precious metals are going to be your savior here. It is not going to be the stock market, ladies and gentlemen. In times like these, history has shown the stock market does not keep up with inflation. Bonds get nowhere close to keeping up with inflation, especially tips. That's garbage compared to the inflation. Wages do not keep up with inflation. You can't outrun it by working more hours. You have to prepare ahead of time in the precious metals. That's why we ran Gold Silver Pros and started it in 2018 to educate you. We've been warning about this for years. Thank you guys for jumping on the program today. This is going to be a bit of a short one. Do not miss Sunday's Cowboy Metals live stream. We broadcast from Texas. We're from the great state of Texas. We take no BS. We do a live stream Q&A and a look back at the week, and we have some news stories as well. Sunday, 1 p.m. Central, right here, same back channel. And wait until you get a load of what we've got next week. We're coming back to the Perth Mint, and we've got something very special for you. We've got some new news, and we show you what we think the Perth Mint is actually doing. And we haven't talked about this before. The CFA who wrote that report I've talked about, joins me on the channel. You do not want to miss that. And we've got a lot of great content coming later next week as well. Stay tuned to the channel. Remember to like and subscribe here, please, so that you get the notifications and we get your support on the channel. And thank you so much for those of you who have already supported us. Comment below. I'll jump into the comment section tonight and answer as many as I can, as well as remember to sign up on the website for the free newsletter so that you get notifications like these. Until next time, guys, this is Rob Keynes for Gold Silver Pros. May you have a beautiful Friday night, a beautiful weekend. Kiss your family, hug your loved ones. We're headed for rough times. Make amends, better your relationships, hold on to your loved ones. You're gonna need them. And stay tuned right here to this channel. We're gonna walk you through every step along the way and hold your hand through it, because that's what we do here at Gold Silver Pros. Until next time, we'll see you guys.
Hey everybody, this is Rob with goldsilverpros.com, and I wanted to bring you a very special message from our newest sponsor, that is Kinesis. And the reason we brought Kinesis on to be part of the program is because we fully believe in their mission. Their mission is to have a token that you can trade online that is backed by something of real value, that would be gold or silver. And they also offer a trading platform which allows you to trade through various cryptos and fiat currencies. The great thing about Kinesis is, for those of you that want to store gold or silver, but also have access to it and actually do transactions with it, they allow you to do that. So it's a better option than just flat out storing it and then having to fly somewhere and take it out when you need it. You have the ability to use it right on their platform. You can send it to other users. They have a debit card for US residents as well, and they have a full exchange, which enables trading of Kinesis currencies for fiat and cryptocurrencies if you want to trade in and out. So lots of ways to get into the Kinesis tokens, the KAU and KAG, that are backed by the precious metals, and also to get out of them and to trade in other things if you want. So there's not this laborious process of getting your gold and silver out of the system. And again, they have a Visa card for US residents, and you can trade these currencies with other Kinesis users, the KAU and KAG, sorry. And so they also have a wallet. So it's a lot like having some of the other currencies you may be used to, cryptocurrency, except for the fact that it's backed. And that's why we wanted to have them on the program. I like the fact that this is backed with something that I trust, that has 6,000 years of monetary history, that is gold and silver, and something that also allows you to interact with the normal everyday financial system as well if you need to get your value in and out. A lot of benefits to using Kinesis. Wanted to share that with you guys. We're so happy to have them sponsoring the program. Look forward to more on Kinesis from us. We are going to do a special profile on Kinesis coming up during the month of June. Stay tuned to that. I'm going to walk through all the benefits of the Kinesis tokens versus other types of currencies, fiat and cryptocurrencies, and give you a full-on review of what I think about Kinesis and what I think the value add is. Stay tuned for that. There'll be a very special video coming up not too long from now.